Welcome back to RPQ Quants. My name is Michael Merle. In the second video, we're diving into the stock segment of everything packed into my super bundle. By the way, if you missed the first video where I covered all the crypto tools and signals, click the link right up here. Okay, let's get straight to it. Here's the member section, like before. I've showed you that in the last video. And when you log in as a member, if you're a super bundle member, you're going to see this page first. And I'm listing everything that's involved here. That's everything packed into the super bundle. And you can see two main segments. One is equities, one is crypto. Last time I actually covered crypto, and this time we're going to cover equities, stocks, options, that kind of stuff. I'm just going to take one at a time, knock down one at a time here. And we're going to start actually with Unlimited. That's something I've been doing for a very long time. I introduced it, I think, in 2021. And a lot of people signed up, and so far it's gone extremely well. Basically, what we're doing, we're trading options. We're doing a lot of strangles. And if you don't want to sell a strangle, then you can just basically trade an iron condor. Iron condor is basically very similar. If you have right here, you sell a call, you sell a put. And if you want to protect your up and downside, you just basically buy one here, you buy one here. It's very simple. And there will be more like an educational video that shows you how to do that. All right, have no fear. So if you're not an avid options trader, well, you really don't have to do much. Basically what I do, I simply post entries and exits right here. And you can see how they flow. And they're intermittent, of course, because this is discretionary, unlike many of the things I do. And it's really gone like gangbusters over the last few years. It's pretty consistent. There was one big loser here. I think that was in 2020. But that's what happens sometimes. And what you really got to look at is the overall curve up. And it's basically a 45-degree curve up. My win rate at this point is 4.66. So that means for every loser, there's 4.66 winners. That's not unusual. And yeah, when a loser hits sometimes and there's big movement in the market and it goes against you, this can happen. But it doesn't happen too often. And since then also have gotten a little bit more conservative in regards to which symbols I trade. As you can see, a lot of ETFs involved. See here, sometimes I have a stock symbol in between, but XLK, XHB, that kind of stuff, XBI. So you see symbols repeating each other. Here's a stock symbol, LBS, XBI again. Very rarely do we do adjustments. My school of thought really is that you take a trade and if it goes against you, you exit it. There's people who fiddle with it and then start selling another option and buy the other one back. And for me, it's just too much of a headache. And I think over the long term, it equals itself out and just take the loss and move on. That's my philosophy when it comes to trading options. Keep it simple, stupid, do one thing that works very well over and over again. And that's what we do. So if you worry about your experience and whether or not you need to be an options trader, no, not really. Of course, you need to have an options trading account, Tasty Trade or TDA, well, it's now Schwab, right? But all you need to do is get yourself an options trading account if you don't have one already, or have your trading account activated for options, and you're good to go. So you follow here, you take the entries, and I do actually post the exits in a second channel, and I always post a screenshot, of course, as well, of the entry and exit, so there's proof for what I've done, what fill I got and everything. And also it's very important that in the entries, I always communicate whether or not I got filled, because it's sometimes possible that I post a trade and I want you guys to take it. But then maybe I'm too stingy or something, it's happened, or in a rush and I don't get filled. Then basically the trade isn't valid. So usually what should happen is that, well, you can take it right away, but it's not really on the books unless I say it's filled right here. And I always tell you if it's filled or not. All right, so that's that. Here's the equity curve. I think it speaks for itself. I don't have to do a lot of marketing around it. And that's what it does. It just keeps going up and it's in good shape. It's done very well because, again, this type of trading is not really related to directional trading. I'm trading on a basis of time and volatility. And that's a completely different vertical when it comes to trading than, let's say, trading on price. Trading on price, we do that, of course, as well, but in different ways, smarter ways, actually. No, we don't look at a SPX chart or spider chart or stock chart and say, oh, it's going to go up here. Oh, it's going to fall off the plate, because that's almost guaranteed to fail. All right, next, what else do we have? Let's move over to the IVTS tool, because I think it's a good segue into what I'm going to talk about next, which is Vixen. So I just spoke about directional trading and I spoke about volatility when it comes to options. And well, volatility is really at the core of what drives the market in my mind, because a lot of things changed in 2013 with the wider embrace of weekly options. I think there were weekly options before, but I think there were far and few between. And then 2013, a lot more weekly options came out for major products, major asset classes, right? And after that happened, you really saw a progression in how the market responded to it, because with weekly options, the trading behavior changed a lot. And volatility became very, very important, because what a lot of institutional traders were doing were to sell options at the expected move range. And if you watched, again, yesterday's video, I probably should pin it again, I talked extensively about expected move, and maybe I should cover it a little bit today as well. And it's really something that has become the proverbial tail that's wagging the dog. Because if you look at the derivatives market, originally it was kind of riding on top of the stock market. Well, it's kind of the other way around now, which is really, really interesting. I could go into lengths about that, why that is, but this is really not the place. Otherwise, when you just follow price action, you're kind of in a reactive state. You're looking at the price doing something, but you really don't know what's really driving it and what the conditions are in which are driving it. I know it sounds very academic or hypothetical, but it's really not the case. One of the aspects of trading on volatility is that you follow the VIX. But looking just at the VIX, again, it's kind of like almost in hindsight. Also, just following the VIX, right, volatility index. It's not easy to really understand what's going on. There's maybe a handful. When I say a handful, I'm referring to a few hundred people all over the world, not just the United States, who really have a deep and profound understanding of how to trade on volatility. I pride myself to be part of that club. No, we don't meet every year. We're not wearing funky hats or anything, but it's a group of people that talks to each other and communicates. We read each other's white paper, that kind of stuff. We follow each other's work because there's a huge edge in it. And one of the things that especially institutional traders are looking at is this right here. It's called the IVTS. And the IVTS, well, what the hell is that thing, right? These lines bouncing around. Well, what I'm doing here is actually taking a delta, a difference between the 3-month VIX, which also exists. When people don't know that, there's a 3-month VIX, and then there's the VIX that everyone knows, which is the 30-day VIX. And the way it's calculated, it's beyond this video again. Just suffice it to say that it's constantly updated, and it's always supposed to give you an idea of what the market thinks. So when you're looking at this delta here, you're looking at, see at this line right here, right? And this bluish line up here, it spikes higher here. This is a good example, actually. And this is actually the raw signal. This is the delta between short-term volatility and long-term volatility. So why do you care about this? Well, because it tells you a lot what the market thinks. And once I talk about Vixen, which is the trading system I've built around it, you will absolutely understand it. Or at least you will understand how very profitable it can be to pay attention to this kind of stuff, as opposed to just following price action. So I kept looking at this and was like, you know what? I've done this for such a long time now. I mean, many years actually I've traded this way. Kept always an eye on this thing, that there must be a way to automate this. There must be a way to actually build a trading system around it. And well, it's still good to know what the market is doing when there's deviations happening here. For this, in this case, you see a reversal. There's a reversal very, very likely. Normally this happens when the market becomes very bearish and then it kind of snaps back. So this is a good situation here. This is the opposite side, which is usually not as amplified. But here on the bottom, when this happens, usually it's supposed to be a little bit of a bounce happening. And that's usually what happens as well. So this is not price action. This only tells you about the VIX, right? But if you correlate it with the spiders or the SPX, you can actually see there's a direct correlation of how these market swings are affected. And this is definitely in sync. And I can prove you this by showing you this, because this is actually the long-term chart. This is the short-term chart. Let me size this up. This is Vixen. So this is a trading signal. And again, everything's included. When you click on these links right here, that's the IVTS tool right here. All you have to do is click on it when you log in, and it pops it right up. So you don't have to really memorize any URLs or anything like that. It's all done for you. And then here are the Vixen alerts. And the Vixen alerts are basically alerts that have produced this profit curve. Here I'm showing the zoomed in version, which goes back to the beginning of this year. You can see these are long trades here, and here are the short trades, and this is the combined curve. And you might think, well, the short side hasn't been doing so well. Maybe I should just hit the long side. Well, yeah, you could. But if you're looking at the long-term chart, you see that, there's actually times when the short side is actually quite successful. And I don't really see a reason here not to trade the short side, because I don't see any deep downside. There's sometimes when it's a little bit below, right here, and maybe there's a little bit of a pullback here, but that happened actually on both sides here. In this moment here, that's in 2022. But otherwise, this thing is just like clockwork. It's very beautiful. So it's a long term. This is the zoomed in version. That's what you usually see when you actually also click on the alert. And this is a good example here. There's no thinking involved either. With Vixen, it's a very simple system. You basically, here, long SPY at, boom, right? Hold period 2 days. So set your clock. When do we exit? Well, 2 days later, which is at the end of the market. There's no thinking involved. Just set your timer, set your alert, and you're good to go. There's no exit alerts. There's just one channel. That's it. Super simple system, but, well, deceptively simple, because that's what it's been producing over the last few years. Again, it's stuff I've been trading manually, discretionary. It's a beautiful system. It's really a great system, and I'm very proud of it, actually, because I always wanted to implement this thing. And this summer I had this, I mentioned this in my previous video, right? This really prolific period in the summer, I just sat down for seriously 2 months and just coding and writing. And actually, that has kind of pushed almost into the present because I haven't stopped for the last 6 months. It's been absolutely nuts and so productive on so many fronts. The crypto front I talked about yesterday, of course, but I didn't want to neglect your stock traders and equities traders. So that's why this is important. Okay, so that's Vixen. You basically will get intermittent alerts. They don't happen every day. You get them when they happen. So boom, the trigger. And if there's no trigger, if you don't see push alert on your phone, if you have push alerts enabled on your phone, you're going to get push alerts for certain channels, not for everything. There's certain channels in here where you get an update every single day. So I don't do push alerts because that would be really annoying. Only the intermittent signals are being pushed. Okay, that makes any sense. So what is left? Okay, so we've talked about the IVTS. The statistics tool, well, not yet actually. That one I keep for last. That one is fun. You'll love this one. So let's mosey over to actually my very oldest and dearest service or signal. And the zero indicator, wow, I mean, I sat down in August or September of 2008, that long ago, and had this idea for a market oscillator. What is a market oscillator? Well, it's a tool that kind of shows you participation and activity, and it's supposed to alert you of divergences. Now, let me translate that. It's supposed to tell you when the market is lying to you, when price is lying to you. And it doesn't happen every day. This is right now the current chart. This URL right here, again, you can just click on here and this will pop up. You have to be logged in, of course, right? So this will automatically reload itself every 5 minutes. And what you're looking at here is the divergences. This is actually not bad. You can see how price action is on the rise. Did you see that just now, that blink? It just reloaded itself. Of course, the market is now closed, so going to see any price action. It's only ticking between 9:30 in the morning and 4 p.m. Eastern, translated into your own time zone. So you see a divergence here. See that price keeps clinging. I hope you can see that. But see how the signal is already dropping? See that? It's getting bearish. So, there might be a drop coming. I don't have a drawing tool enabled, but you see my mouse moving. And right here, we're basically say, okay, maybe if we drop below the spike low right here, great spot to short the market. And again, that's what happened. Here's a little gap because it's a new session, and boom, we drop lower. So that's a good example. I also have a screenshot open where I mocked it up for a client of mine the other day. And this is a good example where you see it on different time verticals. And this is something I probably should explain. This right here is the hourly panel. It's more of a long-term panel. Each candle here is an hourly candle, and the signal is based on an hourly signal. This is the 5-minute signal. And this is what I call the zero light because it's basically the one that runs on a 1-minute graph. And it really is more like for scalpers, swing traders, that kind of stuff. So for instance, here, see that how market it was kind of flattening out. And you see the signal following. You saw that here there's a big drop that was kind of warning you if something's coming. Spike up right here. We don't really know exactly what's happening yet. I mean, we don't have a crystal ball. But then we see how the zero signal, that's why it's called, because there's a zero signal in the center, right? The blue line, the dark blue line. And that's really your reference. And when the signal drops below and just staying a long time below it, you know something's happening. The energy is really being sucked out of the market. There's less participation. While the metadata, the market metadata I'm looking at with this algorithm tells me a lot about what's going on under the hood, so to say, right, of the market. We talked about that in the beginning of this video. So again, it tells you what the market is thinking. And then you just basically correlate the price action with what's happening in the market. I still recommend, of course, that you follow your own signals, that you follow your own systems, that you have your own entry logic and exit logic. So this is not a trading system. This is a market oscillator. And it's just supposed to tell you what the market is really thinking and if it's lying. When you see these little arrows right there, they also show exhaustion. Sometimes they're more frequent than not. It depends on the days. Quite honestly, when they happen this often right here, I would probably just dismiss them. It's a great oscillator. Once you start watching it, I wouldn't say it's addictive now, but you don't want to trade without it. I always keep an eye on this thing. All right, that's that. That's a zero indicator. And that leaves us with, well, the IVTS tool. I kept the best for last. I'm not sure if it's the best, depending on what your needs are. I might also want to point out something in the context of that. When I spoke about the options market right here, I do have a lot of parsers going on the server side that do a lot of work in the background that tell me a lot what the market is doing. And a lot of stuff that I built is based on that. For example, right here, you see the option chain for next week. This option chain here is of the spiders, and it actually is for November 29th. But that's actually one of the things we're looking at when we want to know about weekly implied volatility. And that brings me to right here. Let me go to a different tab. We're still looking at Bitcoin. So yeah, welcome to the statistics tool. And this is basically related to both crypto and stocks because it's actually listed in both segments. Listed down here, I have the expected move tool, which is basically this here, for instance, Bitcoin. Can you believe it? We're almost at 100,000. I was hoping it would happen while I'm recording this video. It would be awesome. But let's pop up the spiders, because what you can do in this tool here, I still call it statistics tool. I don't want to rename it. You can also type in stock symbols or ETFs, because the data feed actually comes from Yahoo. You have hundreds of symbols you can do here. And the little delay you saw actually was because it was actually loading new data. So if I reload again, it should be quicker, because right now it has actually the data. It's supposed to reload every 5 minutes. And on the stock side, it actually gives you a lot more. So, oh yeah, we're going to talk about this in a second. And let me reset this. This is the reset button. The way I wrote this is actually as a dynamic chart, and this was a lot of work. And I'm going to talk about this in a second because I'm really, really proud of it. And it gives you actually something that you cannot get from TradingView, Thinkorswim. Tastytrade doesn't have really much charting. This gives you the expected move. And this is actually on the stock side calculated based on real implied volatility. I have scripts running and I referred to that before. What I do, I basically spit out the expected move ranges for everything in the S&P 500, if you would believe it, and put this into a file, and that's what this thing picks up. And so all you have to do is type in whatever you want, like Amazon, I don't know. Let's check out Tesla. Tesla is a volatile beast. It also tells you the name up here, just like with the crypto side. Here's Tesla. Oh yeah, volatile. See that? And it was just scraping the upper expected move range, which was really, really interesting. And you see how it was actually nibbling on it all week, basically. Yeah, very interesting. Let's actually scroll down a little bit here and talk about how this originally started, because the statistics tool originally started as yet another project that I wanted to realize for myself. But there was this quant trading forum, and I asked around, does anyone have historical statistics on stocks or ETFs and all this stuff? And it was just crickets, right? Like, okay, this is weird because this is so crucial stuff. And so, well, I sat down and wrote it. And it was a lot of work. I wrote this 5 years ago, something like that, and introduced it. I never really talked much about it, to be honest. When I was blogging a little bit more, when I was writing my posts, educational posts, I often reported on these things. But I never really made it a subscription or anything like that you guys could get into. And it's an amazing tool, and I decided to throw it into the bundle here because I think it's really amazing and it fits in so nicely with the expected move tool. So I just kind of, merged it together. So here we are. Here is everything you ever wanted to know about Tesla. You have weekly percent change. We get all the data we can, by the way. Some stocks actually go back to 1950. Then we have standard deviation. I'm not going to explain all these concepts. Maybe I'll make another video on this one day, but not today. This is the return distribution. Unless you're a quant trader, it probably doesn't make any sense to you, so just safely ignore it. And then this is actually the historical change since 2010 for each week what has happened. So that was a big week in 2020. Yeah, look at that. Wow, what a spike, right? Wonder what happened there. So you get the feel, this is not a lot of data, but let's say we pop up something like IBM. Okay, here we go. Very interesting chart. Last week was really interesting. Look how this thing busted higher and just sliced through the expected move range. Crazy. So here we have a little bit more data. And honestly, I normally want to see 20 years, 15 years, 20 years. That's the more reliable. So with a lot of the ETFs, this is golden, right, for example. So here we go, IBM. And you can see, here's, for instance, the weekly skew. And if we scroll down a little bit more here, historical percent change since 1962. So we have data since 62. And you can see what it does, how it performs, usually, in week number 47. So this week right here, it's Sunday today. It's the end of the week. And these were the statistics. That's actually the performance. And you can see, wow, in 2024, wow, we had quite a week, right? Look at this. Crazy. Nice week for IBM. Good for you. All right, Sharpe ratio. Again, unless you're a quant trader, maybe it doesn't make sense to you. If you're more math guy, if you're a nerdy guy like me, this is manna from heaven for you. Weekly percent positive. So this is really interesting. I look at that a lot because this tells me what are the odds. Let's say I want to sell an options contract. Well, outside, like out of the money, options contract. Maybe I do a strangle, right? Or maybe a straddle or something like that, right? And I want to know what are the odds. This week was actually not a bad week. It's not 100% reliable, but it tells you what it did on average, what you could expect. So I always want to, take this with a grain of salt. You also want to take this in relation. This is not a prediction. This is just statistics. Statistics tell you what it's done in the past. So you look into the past and say, okay, what are the odds this week? Let's see here. Whenever I see 50% or something like that, not a bad week. But for instance, in this case, I would also look at the overall market as well, just in case. Always look at the spiders and see what have the spiders done this week. Because if the spiders are really bullish, maybe I don't want to take a big risk here. Yeah. So trading ranges is basically, how much has it been moving in terms of price movement, in terms of realized volatility. And here we are. So it tells you a lot about that. And here in the monthly, same thing. On the very bottom, I'm not going to explain all these because they're kind of repetitive. They're just on a monthly basis. This is really, 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 really good, actually. These lines right here are 12 lines. And I actually have a color weakness, but maybe you can see them. But I can see around 50,000 colors. You can see millions, supposedly. But for people like me, I actually highlighted with a thick line. So the current month, which is November, shows you where you are. And you can see it's actually one of the better performing months. And you can see it up here too. See, November is actually one of the better performing months. Oh, that's trading range. Here's percent positive. See that? 60%. That ain't bad. And so what this line tells you basically is like, okay, had I just invested in IBM since 1960, this is 1963 actually. If I had held it only in November, this is what I would have produced. So what does this tell you? Well, it tells you November is a good month for IBM, okay? Want to keep all this in mind. So you get the idea here. For discretionary traders, this is heavenly. This is really wonderful because it tells you a lot of the stuff, well, that nobody tells you. All the noise you constantly see on the financial news, did they tell you these odds? No. Why not? They're kind of important, right? They tell you what the market has a probability of doing during a particular period. Does it always happen? No, of course not. Do your homework, right? Have your systems. There you go. Let's talk about this tool. This time we're showing stock symbols. You see a lot what's going on here. You can zoom in and out. It's a dynamic chart, obviously. So when you reload it, it automatically gives you the ability to zoom in just with your scroll mouse, if you have a mouse like me right now. And I have 2 years of data. You can scroll around here and I adjust for everything. And I'm trying to make it look as best as possible. The one thing to pay attention to, of course, are always the expected move ranges. So the week started right here. And on Tuesday, it scraped the upper expected move range. And again, that's one standard deviation, bell curve. You remember that? Maybe also from my last video. This is one standard deviation, one sigma, and it tells us what the market is thinking. And it's actually based on options data in this case. So it's real. That's professional traders trade on that basis. And within this range, the market expects price to stay there 68% of the time. Now, does it always do that? No, of course not. It's again, we're talking probability. But, and this is the most important part, when it starts breaching, the dynamics in the market change. Because what you need to understand is that this range right here is something that professional traders pay attention to. And guess what they do? Let's go get something maybe, I don't know, Amazon, right? Because this one has moved a lot. And so this is a good example of what happens. It goes completely monkey crazy. Why? Because a lot of people had to rush to cover their positions because institutional traders, when they see a week like this, right, guess what they do? So the week starts right here. And this is a perfect week for an option seller. Why? See where it started? Okay. So we have this range right here. 68% of the time we're supposed to stay here. So what do professional traders do? Well, they sell options to guys like you right out here and right down here as well. And the odds of those expiring worthless, especially a little bit further out, are like over 90% in most of the cases. So they're not going to sell you at the money, but they usually sell you something a bit further out the money. A lot of retail traders love these things because for them, they are lottery tickets, and also they really don't understand how options work properly. And in most cases, they don't even trade verticals, but they trade naked options, which is a terrible, terrible idea. And again, I've explained this in the past, and I'll probably explain it to you guys again in the future, and why verticals are actually much more profitable than a naked put or a naked call in, like, I'd say 95, 98% of the cases. I'm not kidding. I've done this for a long time. I've been trading since 1999, so I've seen it, and these are the odds. So this is a perfect week for an options trader, for especially an options seller, right? Not so good for you if you expected price to move outside these ranges. And when this happens, though, like we saw previously, right, with Tesla, when this happens, if price pushes all the way up here, wow, it gets really, really expensive, right? Because these premiums were really cheap and, well, people buy a lot of them. So it gets more and more expensive the further out you go. So they cover themselves, and that actually drives the price higher. And it's the opposite equation on the downside. So what happens is that people buy these puts down here. People love actually buying puts, especially retail traders. And institutional traders love selling puts to them. But when the market falls hard, then volatility also spikes higher, which also increases the premium. So it even amplifies it even more. So these dynamics hold up even stronger when it comes to the downside. And so they're rushing to sell the futures, sell DS, sell the SPX if they need to, and so on. And also, of course, sell, in this case, Tesla if they can. Right? So this is what happens. And this is why keeping an eye on this expected move range is really, really important if you want to structure or plan your trade. Because you know also when you're wrong, right? It's not a bad idea if you're, for instance, taking a long trade right down here, and this is going to be the expected move range, that you put a stop down here, a little bit below. Because you tell the odds are pretty high that we stay inside here. And if it pushes below here and maybe closes below at the end of a trading day, that's usually pretty bad news, and that usually suggests that the dynamic is going to continue lower. That's my experience. That's the way at least I've been trading it, and I've been doing pretty well with it. Okay, so I think that covers pretty much all of it. We covered the zero, the IVTS tool, statistics tool right here, also the expected move tool now. Again, both for Binance and Yahoo Finance symbols. And of course, unlimited entries, options trading. And when you click right here, you see the equity curves displayed for all the signals that I offer. So for instance, here, when you click on Vixen up here, and that basically pops this up. Also, of course, the profit curve is also shown when you click actually right here. There's Vixen profit right here. And that pretty much wraps it up for the super bundle. I really consider it the Swiss Army knife for any serious trader. No matter what you do in the market, if you're a crypto trader, you'll find plenty of value down here. Signals, indicators, everything you need to succeed. And same on the stock side. No matter what you do, right here, you find plenty of value. It's a great product. Great bundle for a great price, I might add. And that's a great segue to the two links right up here that you should see right now. You have two options to sign up. You can sign up for either monthly recurring, if you like to go it slow, or just lock in an entire year. I know what I would do. I would lock in an entire year, but if you want to go on a monthly basis, the option's there for you, okay? Either way, you can't lose. And of course, if you have any questions, right up here, you should see an email address. Don't hesitate to reach out if you have any questions. I'm here to help, as usual, okay? That's it for me today. Thanks for watching. I hope you found this informative and entertaining. And see you all next time. Cheers.